We're all here for the same reason, is that there's work to do. We talk a lot about at CDP, that the race to 2030 is on. The countdown has begun. 2020 starts the year. Kind of marks the start of a 10-year race. We can't afford to lose. 2030, it's not just that we like round numbers. It's actually a critical milestone. If you listen to the IPCC, we need to have reduced global emissions by about 50% below 2010 levels by then. It's also kind of the finish line for the Sustainable Development Goals and a lot of what that means. And frankly, many business models need to shift quite a bit between now and then, and at a rate that's way faster than what's been happening so far. So, in our case, CDP, I'll tell you just a little bit more about it in a minute, but, we're turning 20 this year as it happens. We've accomplished a lot in that time, and the business case for action, for climate action, is getting stronger every day. But the fact is that change is not happening fast enough, or big enough, and to put us on the right trajectory to 2030, frankly, we need to do much more in the next 10 years than we have in the last 20, and we need to start bending that curve now. So many of you may not know CDP. So who are we? As you heard from Dan, we're basically the global environmental disclosure platform for climate change, for water security, and for commodity-driven deforestation. 20 years ago, we set out to create a systemic link between financial information and environmental information. We were doing this on behalf of a group of institutional investors, really in order to make risks and opportunities visible to the financial system in order to start shifting capital. 20 years ago, we started by asking disclosures from 200 companies on behalf of 35 institutional investors. In our last disclosure cycle in 2019, we have 525 institutional investors who manage, last time we counted, it was $96 trillion in assets, but with the market having moved quite a bit in the last few months, actually it's over $100 trillion of assets. So a lot of the investable, if you will, capital in the financial markets. So we ask for disclosures on behalf of these investors. We had disclosures from over 8,400 companies based in 100 different countries, representing well over 50% of global market cap. So it gives you a sense of the scale. What's interesting too is not a single one of these companies in any of these 100 countries did so because they were required to. There's not a law or a regulation in any of these countries that requires the level of disclosure that we collect. A few countries have some very bare bones, disclosure, maybe disclose your operational emissions. But there's just, it's not just in this country. There's nowhere the level of comprehensive requirement. And so the voluntary system we've built has been quite needed in order to flow information through the financial ecosystem, through what is now known as ESG, that really feeds everything. All the indices, all the ESG analytics platforms, as well as all, frankly, the environmental NGOs that try to get companies to act. CDP, what we do is we get companies to tell us actually what they're doing, and that's what is a good start then to get them to action. So, speaking of action, inaction is the riskiest and most expensive choice, and it's an unacceptable one, certainly for ourselves, but frankly for companies, and more now for their financial partners, their banks, their investors, their insurers. As you heard from Dan again, there's just news literally every day. I think yesterday, JP Morgan, and we'll have a panel, but JP Morgan talked about catastrophic impact to portfolios if climate action is not managed. So literally every day it seems the stakes are going up. We see the news every day that the situation is critical, and therefore what we collectively all do, not just in the next 10 or 20 years, but frankly the next 2 or 3, is critical. Because again, we need to bend the curve so that we can land 2030 in a way that will be a lot more accessible and acceptable. So in their CDP disclosures, again, companies respond to these very detailed questionnaires, which are now aligned to the TCFD. I don't know if any of you know what that is. The Task Force for Climate-Related Financial Disclosure. This was a platform or framework introduced by the Financial Stability Board, which is really the top-level governance of the world's financial system. It was introduced and submitted to the G20 finance ministers in 2017, adopted by all, technically 19, because the US was present but did not vote for or against. But anyway, it was adopted by the G20. And so through these disclosures, then companies disclose enormous both financial and physical risks related to climate change and water insecurity. So I'll give you some stats just to give you, again, kind of the framing for the day. In the US specifically, we have 75% of the S&P 500 disclosing to CDP, much more of the kind of S&P 100 high emitters. Only 44% of North American companies actually quantified their financial risk associated with climate risk. Those that did, so the 44% of North America companies that actually put a number on it. Most companies identified risks, but didn't necessarily put a financial number on it. Those that did said they had about $294 billion of climate-related financial exposures that would hit in the next 3 to 5 years. And again, this isn't 2050, this isn't 2100. This is almost $300 billion in North America of financial risk. Globally, we see that this number is over $1 trillion from companies disclosing to CDP. Just on water alone, North America companies reported over $22 billion in near-term water-related impacts. So at a time when political solutions are stuck in neutral or in some cases in reverse, the scale of change that's needed has to happen at the speed and scale of business. I mean, that's just a fact. Politicians had their shot 20 years ago, and it's not that political solutions aren't needed now, they are. It's just those wheels turn way too slow. And so talking to the next generation, and in some cases the current generation of business leaders, that's really your task, that's really our task, is to actually leverage the gears and the strength and the power and the scale and the speed of business to make this change happen at the speed and magnitude that it needs to. Because in fact, business can absolutely be a powerful force for positive change, if it chooses to accept that role. In fact, when business sees an opportunity to do something, it's really, really good at doing that. And that's actually the good news, is that acting on these risks is actually not only needed, it's not only possible, but it's actually a really good idea for business. It's a great business opportunity. So what are we seeing leading companies doing to address this risk? So one of the things we do with all these disclosures we get is we score them, and we not rank them, but we rate them. So we just released actually our corporate climate, water, and forest scores a few weeks ago, and just wanted to share with you some of those highlights. So climate disclosure is absolutely now the norm. Companies not disclosing, frankly, are quickly running out of reasons to explain why, and investors are losing patience. I mean, frankly, we all are. Disclosure on water risks and deforestation, though, are still too low. So climate disclosures are really good. Water and forest still too low, and that needs to change. In our system, if you don't respond to an investor request through CDP, you get an F, kind of like at school. You don't turn in the work, you get an F. If you're leading the pack, you get an A. Just to give you a sense, only the top 2% of disclosing companies get an A. So out of 8,400 companies globally, it's about 170. In the US specifically, it's 35. For many years, the US was the leading country in terms of getting A-rated companies. This year, for the first time ever, it's second. Number one is Japan, after interestingly, not policy change, but both the Ministry of Trade and Industry really pushing for this kind of the TCFD-aligned disclosures to really identify climate risk, and then the Ministry of Environment pushing Japanese companies, saying his goal was for 100% of Japanese companies to set science-based climate targets. And just those signals, again, this was not legislation, this was not policy, this was not regulation, this was just signaling from policymakers, has actually doubled the number of A-listed companies in Japan in just 1 year. In the US, only one US company got what we call a AAA, an A on climate, forests, and water. In fact, they were the only company that got an A on deforestation grade, which is not nearly enough. And that company is HP Inc., Hewlett-Packard. So they're not in the room, but you know, if you have a chance, give them a shout. We need more companies to take all three of these topics seriously. So what did we see in those disclosures? You know, we saw a few things. The level of ambition and the scale of action are rapidly growing. The companies leading the way are actually starting to gain competitive advantage over their peers as the market shifts. In fact, you can spot 4 key themes in those disclosures. One, the A-list companies are outperforming the market as a group. So if you took the cluster of A-list companies in any given year, for the last 7 straight years, they have outperformed their peer benchmark on the stock market by an average of 5.5% a year. And that's a pretty significant delta. 7 straight years. So this, you know, for us, again, not causation necessarily, but certainly shows a strong correlation between financial performance and environmental performance, which is really what we tried to do at CDP early on to kind of find that those two are linked. Second, we're seeing companies setting now more ambitious emission reduction targets. So 100% of our A-list companies have an active greenhouse gas reduction target. More than 2/3 of those are what's called a science-based target. If you don't know what that is, you can go look it up, but it's as the name implies, it's basically setting a goal that is aligned with the decarbonization pathway that is demanded by the Paris Agreement, as opposed to whatever just the company says they can do. To date, actually, over 800 companies have set or committed to set a science-based target, including nearly 20% of the S&P 500, and that number is growing fast. You know, we're making a big push this year ahead of COP26 later this year to make sure that that number grows fast. And this compares, so if 100% of our A-list companies do, overall, all North America-based companies, 75% of them have an active greenhouse gas reduction target. Again, that means 25% are still very much behind the curve, but knowing that there's not a single basically legal or regulatory requirement to do this, that's actually a pretty good momentum already on the voluntary side. Only 56% have water-related targets. So you heard earlier about, you know, pretty significant financial exposure. Water is still, you know, very much getting less traction in corporate action. And then third, companies are really taking comprehensive action. Again, 97% of our A-list companies engage their full value chain on climate-related issues, not just their supply chain, but the whole value chain. It can go down into product use, customer life cycle, all the way down into end of life as well. That compares to only 25% of all disclosing companies, so 75% of A-listers versus 25% of the total. And then finally, what we're seeing is A-list companies are actually seeing and seizing opportunities. You know, they know sustainability presents actually an exciting race to the top. It's an opportunity to innovate, to rethink business as usual, and specifically to deploy capital in new ways, actually proving that you know, business and environmental responsibility is actually good business sense. This is not kind of a race to bottom least cost compliance, which sometimes happens with well-meaning but poorly designed regulation, where you end up with what's the best way to comply at the lowest possible cost. So we're like, how do I stay at the floor? We're really trying to get everybody to aim for the ceiling. And so these A-list companies are actively pursuing opportunities in this transition to a stable climate, water secure, deforestation-free future. And again, it's not just about being good. It's about good business. We're seeing, you know, 84% of our largest U.S. disclosing companies identified in their own spheres climate-related opportunities collectively valued at $831 billion. So they're seeing about $298 billion of risk, over $800 billion of opportunity. Same on water, actually. A lot of organizations see a tremendous amount of water-related opportunities in their business models, actually $340 billion worth of water-related business opportunities in the next 5 years. Again, these are exciting numbers. This is what actually attracts capital. In total, actually, that's about $1.2 trillion of business opportunity that is associated with, again, leaning into this low carbon and water secure transition. So, in our case at CDP, we're the ones kind of, we keep score. We help set both the tone and the pace. Through all this information, we help the world keep track of whether we're, at least from a business perspective, on track to meet the goals of the Paris Agreement. We also help companies actually see how they measure against their competitors. So we kind of hold up that mirror and do a lot of engagement with companies. Without these standardized disclosures, frankly, the environmental movement would be blind and accountability would fall flat. So what do we need? What do we ask from the business community and aspiring, business leaders like many of you? For companies disclosing, they're already behind. I mean, there's just no more excuse. That's what we talked about earlier. They need to begin now. This is not the time for small ideas or half solutions. It's time for companies to kind of step out of their comfort zone and feel like it's okay to be uncomfortable and ambitious. That's what we need them to do. One of the things we push companies to do, as I mentioned, is setting a science-based target. Anything less is just not good enough anymore. Engage and empower their suppliers around transparency and sustainability. Actually, we see a lot in our CDP supply chain disclosures, which is a whole separate set of disclosures, that many of the suppliers for leading corporations actually want to be part of the solution. They're innovating, they're investing, they're deploying new ways to either decarbonize their production methods, and introducing new alternative sustainable materials, etc. Make the necessary investments. Again, it's great when companies say the right things, when they set the right goals, but at the end of the day, it's what they do that matters. And it's not just Wall Street and the financial system that needs to shift capital. I mean, companies truly vote with their wallet, and so you need to see where corporate capex is going, because that's where the capex is going. There's a big oil and gas company recently saying we're really committed to a transition to renewables. 1% of their capital expenditures going into their renewables business, 99% in their conventional business. Again, whatever they say, you look at what they do, and maybe there's a disconnect. And then finally, I think we need companies to use their voice, corporate voice, responsibly and use it for impact. Many are already engaging their customers, or sometimes their customers are engaging them, as well as their employees. And then we need businesses to advocate for good, sound environmental policy. It's a powerful tool in their arsenal, especially here in this country where business, frankly, has an outsized influence on what happens in policy making. So that if you have power, use that power responsibly and for good. Just to kind of wrap up, I mean, it used to be that it was good enough for a company to really manage their footprint, manage their operations. That's not good enough anymore. We need system-level scale and ambition in action. That's what leadership looks like. This is a race we have to win. It's an exciting race. It's a race to the top. The view is great from up there, so let's all get up there. And again, the risks of inaction are great. The rewards for decisive action are greater. So let's get to work. Thank you.